Hello, this is Karen from Karen Ning Real Estate with Platinum Realty. I'm a realtor, business owner, and a financial advisor. As you all know, with economy goes up and down, our local real estate market is very strong. Today, we are going to talk about how to use retirement assets to purchase real estate. So this kind of funds is tax deferred and you can maximize your capital gains. There are two types of retirement accounts are very popular in purchase real estate. So they're called solo 401k and self-directed IRA. So the solo 401k, also called an independent or personal or self-employed 401k, gives them some of the same advantages of people working as part of a large organization. This account allows self-employed people to set up a 401k that they will manage themselves. It's for people who work for themselves in many capacities. For example, partnership, corporation, independent contractor, or individual practitioner. So the account owner can make tax-free contributions of up to 61,000 annually and is fully in charge of how the money is invested. The solo 401k provides the same chance to self-employed individuals who are allowed to make contributions both as an account holder and as an employer. So self-directed IRA, this account works in a way that's very similar to solo 401k, in which an individual sets up a one-person company owned 100% by the IRA. So funds are either rolled over from existing accounts or moved from other sources. A self-directed IRA is under the control of the investor, who can choose to invest funds in a variety of asset classes, including real estate. As you can see in the chart, there are the comparables between solo 401k and a self-directed IRA. So the way an investor goes about the process of using retirement funds to buy real estate assets can differ depending on the situation. So some investors may want to be more involved with the actual property, while others may want to own a piece of solid cash flow property with a proven track record and a relatively conservative growth. So now I'm going to show you the three major benefits for this type of account. So first, freedom investment. So the funds can be invested in virtually any asset. Second, the freedom of time. So with checkbook control, the fast investment decisions can be made to take advantage of opportunities that arise. Third is the freedom from fees. No transaction fees or asset-based fees with checkbook access. Okay, that's three major benefits for this type of retirement funds. So you can use this type of retirement funds for two options. One is called Real Estate Investment Trust. It's also called REIT. So pretty much you are investing in a diversified portfolio containing properties across the US. The second option, you can also put your retirement funds in a local private real estate, something like commercial real estate or residential real estate. As you can see, the Des Moines is among the top 20 best retirement locations. So our local market is booming. And in recent years, Des Moines become more and more popular for investors to come in to invest their funds. Okay. So the best benefits and the benefits for investors, okay, and I list 3 benefits. First one, financial agility. So the checkbook control allows purchase of foreclosures, tax liens, and other on-the-spot investments as soon as they are presented. Second, hassle-free. So this type of IRA checking account provides a one-stop destination for all transactions. There is no need for a third-party request that can cause delay and frustration in real estate purchase. The third, you are safe. So the checking account for the self-directed IRA or solo 401k is set up by the investor at the bank or his or her choice. So it is always under the investor's control. So if you want to buy a rental property, okay, and now we know the options and the benefits for invest your retirement money. And now you're going to ask me, and how do I purchase? So if you wanted to buy a rental property, you would open an IRA account, okay? You can transfer your cash from existing IRA or possibly 401k into the custodial account. And then you purchase real estate under this IRA account. So you can also buy and sell real estate in a self-directed IRA if you are in a flipping business, okay? But there are limits on how many you can do per year. The profits on any transactions would be tax-deferred or tax-free and would allow your IRA to continue to grow with those tax advantages. Okay, so using the real estate to generate retirement income is an option for nearly any investor, whether they work for a large organization, whether they're self-employed, or have already retired. There are several approaches to take. So this would be chosen to, so you can choose to best suit your individual investor's situation. So let me tell you the 3 overall strategies represent the majority of retirement investments in real estate. So the first one, purchase a property for appreciation. This is a classic real estate transaction. The investor purchases a property at a decent price and holds it for a long period, hoping for further appreciation. The second one, rental unit. Okay, the rental properties can come in the form of single-family unit, multi-families, apartment buildings, or commercial real estate, like a strip mall or office building. The rental units are commonly known in the industry as cash flow properties and can provide reliable dividends. Okay, so the third one, flips. So flips involve purchasing a property at a discounted price, possibly doing some renovation and then resell it as quickly as possible. So these approaches offer a range of ways to invest retirement funds in real estate. So make it a viable option for almost anyone with some funds to invest. Okay. So talk about talking about the capital gains, we can avoid the topic 1031 exchange. Very often, I have some customers asking me about 1031 exchange. Okay, so the 1031 exchange allow the investors to defer capital gains taxes on the exchange, the capital gains taxes on the exchange of like-kind properties. Essentially, this allows you as an investor to sell a property to reinvest the proceeds in a new property and to defer all of your capital gain taxes. Okay, let me give you an example. Okay, so for example, an investor has a capital gain of 100,000, or ordinarily they would incur approximately 35,000 in federal and state capital gains tax. After taxes, only 65,000 remains. Okay, after tax, only 65,000 remains for future investment into another property. If the investor were to purchase this new property with a 25% down payment and a 75% loan to value ratio, okay, so the maximum they can purchase a new property is 260,000, okay. However, if the same investor choose to go with a 1031 exchange, they would be able to reinvest their entire 100,000, okay, and assume the 25% down payment and 75% loan to value ratio. So the maximum, this will allow this investor to purchase 400,000 in real estate to maximize your capital gains. Okay, so the 1031 exchange protects investors from tax on capital gains and also enable them to grow their portfolio significantly and increase their return on investment. Okay, so using the retirement funds to make real estate investments is growing more and more popular because of the many benefits in this option. And so we suggest you to seek advice from your realtor or tax advisor. Okay, so to avoid some pitfalls and be able to navigate the unfamiliar waters of real estate investing. Okay. Okay, thank you for listening to my video. Please click like and subscribe my channel for future videos. Thank you. See you next time.